Good afternoon. This is Ken Long from Tortoise Capital with a review of a swing trade of the week on CLF. CLF has been one of our favorite trading vehicles for a number of years. It's been getting punished in this global slowdown in the basic materials, but it had some interesting price behavior different than the rest of the market in the past couple of weeks that is continuing, and so we want to share how we look at things through our regression line crossover framework and the regression line 10 compared to the Dragon, just as a way to bring those ideas to life. So early in July, this thing had its most recent collapse down from below 5, and we had an interest in the short side here once we had the Bollinger Band pinch. You see the Z3 pinch occurring, and then a breakdown below this previous low. This was sort of the final straw that we needed to get short inside here. So this is the stalking area, and then failure is in here with the stop above the Bollinger Band mean, or using the PSAR. Either way, you're pretty happy. Even if you use the north skin of the Dragon, which is this 10-period Bollinger Band, you were very happy with that short. It didn't take you out until down around 280. I want you to notice at position 1 that what we have is a pretty rare phenomenon, and that is when the Dragon has come completely out of the river. You notice this region in white is an indication of just how serious and significant this sell-off really was. It's hard for the Dragon to stay completely out of the river because of math. There was an RLCO outside of the river that occurred here, but no follow-through. Failure here at 3 would get you short again in our strategy, and would take you down to 210, which is a significant. That's another 9% sell-off was available in here. And then we had the first little piece of buying pressure here. This is almost an RLCO here, although the 10 never actually got below. But this little bump in price, and then the failure to fail further out here to the blue circle, was enough to bring the Dragon back into the river around this area. You see that he has now started to rejoin the river. So this distance between 1 and 3 is the high payoff opportunity for a second leg, or the beginning of a second, or the beginning of a bottom being put in. So now around 4. Here was an opportunity for Cliff to fail even further, but it held this swing low at 3, and so we take this as a sign of maybe some better things to come. At position 5, I want you to notice that now the Dragon has completely come back into the river, and we have now a little bit of distance between the 30, which has now rolled up. It peaked here and then started to roll up, and the 10 is above it. The Dragon is back in the river. And so at position 6, we're really interested in stalking this. And at 6, we get this entry here at the green line, and that's where the regression line 10 has come through the Dragon to the upside. And so we feel like we can buy this here at about $3 even, and with a stop here either at the south edge of the Dragon or at the PSAR, or if you just want to use the bottom of the river and just hold it there, you're fine. I want you to then notice how the 30 slope of the 30 has continued to improve at position 7. This has now, the 30 has crossed the Bollinger Band mean. That's the black line crossing the red. And then here, the black line has left the river. That's the beginning of trending behavior. So all of those are interesting moments in the life cycle of this trade. At 8, I have no problem if you had bought this at $2.90 or $3 with a 40 or 50 cent stop, and you're holding almost 2R in hand when it gets out here beyond the floodplain, and you get a 1, 2, 3 exit in here. If you want to take that exit where it comes back to the edge of the Dragon, or makes a 1, 2, 3 low, that's fine as well. If you take that exit here, then your re-entry has got to be at about this same price, when after this spike down you get a 1, 2, 3 entry back here at about $3.50, just in time to posture for the move out to Z plus 3. If you're back in here with a re-entry at that spot. This is favorable because now you can see the 10-period regression line has left the river. The 30 has left the river. Price is out of the river. The 10 is almost ready to come through the dragon. So if you're not into this position yet, well, all we really need to see is the swing or the daily low from Friday to hold at 370 and any kind of upward price action, especially if it's above this 380 mark in the previous swing high. Then then off we go, and then the next move is going to be up here to this next resistance level around 470. So there's still plenty of room to the upside in Cliff's Natural Resources, and I'm prepared to think of this as the swing bottom. I like that the volatility has collapsed and now is starting to expand again, as you can see in the Z3, but to the upside. So there was some nice moves in here where you're getting a measured entry around 3 on the long side with about a 40-cent initial stop, and you were able to cash and exit somewhere between 390 and 340 for either 1 or 2R, and then an opportunity to get back in and then have a quick hit from 350 to 420, and again with your 40-cent stop, that's going to be 2R potential just from the Thursday-Friday trade. So I'm still holding this one on my swing from this position, and I've got my stop here at 360, so I'm in the money, and I'm looking forward with some cautious optimism if we get any kind of recovery in the commodity complex next week. So this is Ken Long from Tortoise Capital with a review of one of our swing trades. We'll be covering some more of these tonight in the members workshop as we look at the week ahead, as we find our swing targets from the weekly report and start framing those trades to take advantage of this volatility event of the past week. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.